Hey everyone. Since we had CPA yesterday and the reaction was bullish, I thought I'd do another update and see where we are and what I think we should be expecting moving forward. Now, we had a soft CPI, a bit hot on the month over month relative to expectations, but year over year basically spot on. Core CPI came in 3.1, but averaged up. So the real number was 3.059, so basically 3.6, 3.06, sorry, but rounded that by 3.1. And the expectation for next month is core flat, basically again 3.51, but since it's 3.05, but since it's so close to the middle point, like even a slightly soft thing can give us headline of 3.0, so basically a reduction from the 3.1 we got yesterday, or at worst, like we get 3.1 again next month. And the headline is 2.84, so a significant increase, but that might be a bit missed. We have Truflation, if you remember Truflation, and it's basically uh, not showing an increase in CPI for the month of August so far. Like we had this big drop at the beginning of the month, which they usually adjust at end of month, like here. Like basically every single end of month they have a big drop, but not seeing a real increase. And this plays out in the theory that, or there are two theories. One is that the inflation impact from tariffs is going to be so spread out that it won't cause a big spike, which is what is happening right now. Or second theory is that the actual inflation impact will hit late fall, not now. Now we're saying like benign thing. There's gonna be an actual spike maybe like in November, October, November, and that's gonna be a one-time thing, and then it drops back again. So both these things are happening. In my opinion, we'll see if the October, November one becomes reality. But until then, I don't think we will see inflation spiking significantly. And I think there's a bigger risk that we get a soft print again next month than having a hot print. We shall see how it plays out. Now, moving forward, uh, this correlation with the 2018 bottom, we didn't get this pullback, more like a side correction a bit later on. We're getting to the so this reddish version here is 1 ATR and it's 65.17. So we're getting close to the hitting 1 year ATR on SPX. Then on the quarterly, we have technically a golden gate scenario in which we crossed the 38 fib and we should be going to the 61 fib, which is 65.54. And on the monthly as well, which is swing, we have a long trigger going above the green level, and we should be hitting something like 5. If we continue going up, we will trigger a golden gate, and we should be hitting 6559 at some point this month. Given that momentum is on this side, and I think we will overshoot the yearly 1 ATR and actually go to somewhere around this level. Like we will keep going up. The like go here, overshoot a bit, and sometime at the end of the month we will turn and actually have our correction because that correction we're not getting away from it. But for now, I think we overshoot this and go higher. The only thing that can invalidate this, I think, is a reversal today. So if we try to go higher today and we get rejected and we do like a massive engulfing candle in which we open higher, which is looking like futures are up. We open higher, we go higher and hit 6,500. And when we hit 6,500, because it's only like I don't know half a percentage away, 0.6. So we hit 6500 and we get strong rejection for 6500, and we do like an engulfing candle. So we basically we do something like a 2% candle, I think it's going to be if we do, let me put it at 65. So we see 6500 and we do like a 1.7% candle down, the full range. So if we do something like this, the bullish scenario kind of goes away. We probably start the correction now. We're close to OPEX anyway, so it wouldn't be surprising to have a reversal on OPEX Thursday or OPEX Friday. We shall see, but I don't think that will happen. I think we get acceleration up and we go like 6600, something like this, by end of month. It won't be in a single swoop, but these things tend to generally look like that, like the overextension, like it looks like this, a constant surge up, or the one we had in 2020, like this one also started around August OPEX, started on the first day of August OPEX. Now it's the Wednesday of August OPEX, and it just went relentless up before a final surge up and the correction starting, and we got a 10% correction. So these things tend to accelerate up. It won't be like yesterday, which was 114. It's gonna be like point 0.2, zero point 0.3, zero point 0.5. Maybe the final one is another 1% candle, and then we start the correction, but more like towards the end of the month, maybe around Jackson Hole. When is Jackson Hole? August 20, 21st, 23rd. So that's next week. So this is the earliest it can start. It can begin depending on what JPOW does. Now that Trump got to put someone on the Fed board, maybe we don't see JPOW getting fired anymore. If signals are that they will cut in September, probably not getting fired anymore before Jackson Hole, maybe sometime later, but we shall see. And evidence to support this is breadth recovered a bit, so we went into positive here. It's barely visible, but we went into positive on McLaren oscillator. This one tried to cross down, it didn't, and now it will probably accelerate up. We had another 80 above 80 UVOL day. So we had this one, we had a follow-up late. It doesn't count as a follow-up because it came too late, but maybe we get another follow-up today to back-to-back 80 UVOLs. And this one is turning up as well. So kind of breadth recovering. When we go back to this SPX, oh, okay, we have VIX closing below 15, and we had a brief close below 15 as well on July 25th, but then immediately went up. So again, to disprove this, it has to immediately recover 15 and close below above 15. So this would be in sync with the rejection of the attempt to move higher in SPX. If it happens, it has to happen today. If we get continuation down and another close below 15, this is price acceptance. And when we go below 15, we usually go all the way to 12. So I would expect, and it's going to happen fast. So I would expect we have this type of move down. We go to the 12 area, 12, 13. Maybe not all the way to below 12 like it happened here, but just like we see here, the follow-up is fast and we go to the 12, 13 area to make a bottom. So this has been happening. Then we have crypto with ETH going to new highs. ETH almost at the previous all-time high. Bitcoin not really doing anything. We have more like a alt season setup, but the only one moving is actually ETH for now, which is normal. Uh, but looking at like let's look at some weekly charts. Uh, this is ETH is back up, but ETH BTC looking pretty good. But all the other smaller names like ADA, they look like they haven't even started yet basically. Like sure, bit of a rally, like IOTA, EGLD, like they look that like nothing has happened. Even Dogecoin, like it has this surge up here, but it's not nowhere near the highs. So they still have a lot of room to go. Some of the big ones like Sol and ETH have already moved, but stuff like this ones don't haven't really moved yet, and they have a lot of room to get the move going. ADA looks pretty good. Like once it breaks out or it starts moving, it should be going to like 1.6 pretty quickly. We'll see how it plays out, but you get my point. Then we have TLT, or actually I'll do the which did a strange move that it also did on the last inflation print, I think. Where is it? Daily, okay. So this was around July 9th, and don't remember exactly when CPI was then, but also we had a soft print. We also had a big drop on the day and then reversed and went higher. And it's looking like it's going to be, oh, sorry, I'm looking at the wrong candles. Let me look at TLT because it's easier. So yeah, I think this one, yeah, Tuesday, July 15. And on the previous CPI print, again, we dumped and tried to go higher and then made this hammer candle and recovered. And it's looking like the same thing is going to happen today, this time as well. Like some inexplicable drop due to a soft CPI, and we already recovering. This will open basically where it was yesterday, at the where it was 2 days ago. So pretty strange type of movement if you ask me, but I don't know, some sort of arbitrage play later. I don't know. Then we have on the DXI side, thought it would squeeze. It tried to squeeze, but then that soft jobs data completely killed the move, and now it's looking for a bottom again. Most likely, it's going to consolidate in this area, like not retest the lows, but consolidation in this area is to be expected, and like more talk of cuts, more talk of soft jobs data is not going to do the dollar any favors. But just like I was talking about TLT making a bottom is about mm, what it's not doing, and what it's not doing is making new lows. The same is going to be true for USD as well. As long as it's not making new lows, this is on the path to recovery. And maybe we break this trend line. Come on, man. It's not. Maybe we break this trend line. Maybe we bottom actually here and go a bit sideways and try to go higher again. But something like this, go in this range for a while. Or maybe we go lower, but I still think we kind of consolidate in this range here for the foreseeable future before eventually going higher because reasons. So basically, crypto bullish and potentially in alt season. Equities upside momentum. I posted the chart about IWM short interest, which suggested it was more prone to squeezing. Like I said here, we already got a pullback, and uh, yesterday on that CPI print, we got a 3% move in small caps, also likely to continue. But remember that this type of moves are traps. Like we had this one here, we went higher, maybe we get to 240, 250 this time as well on IWM. But this was a trap. We dumped later. This one, same here. This was caused by a CPI move. We went higher. This one was caused by a CPI move. We went higher, but it was always a trap. And I expect this one to be a trap as well. We go back to the highs, then we dump horribly back to 200. We go to 250-ish or something over the next couple of days because surge, like this surge here, like this surge here. And of course, without yields going lower, I so especially if yields don't go low, don't start dropping again, this is a complete fake out. But I expect yields to start dropping. That fake out from yesterday on TLT is just a fake out. We get this kind of surge for a couple of days. and then we top out until IWM drops again. So it's not that scary. And on on this top here, if we sync it up, it's synced up to this low. So basically, all the shorts got washed out, and when all the shorts get washed out, it's the perfect moment to dump it. Not when all shorts are in, but when all shorts are out. So I expect we will get this type of move here as well. It will take a couple of weeks, but everyone free short IWM will get washed out. We will get a low in this chart, even though we won't see it because it's not something retail has access to. But I expect it will look something like this, and then the dumping in the IWM happens. But like I said, sometime towards end of month. So this is my expectation. Let's also draw it out a bit, and let's do it on SPY. So we search, we even overshot here. We have another gap up and likely to continue. Uh, Target is 648, which is 6500 for SPX. And like I said, there is a small chance that we get rejected here. If we get rejected here, we should have an epic dump that makes an engulfing, and that epic dump will take us all the way to this level. Uh, and then we see. So this is the engulfing candle if it happens today or tomorrow. But other than that, it should just consolidate in this area like this version here, and then go higher eventually. So 6600 would be like 658-ish. So we consolidate here and then we go higher to 658-ish. This is the baseline bull case, and then correction begins after a bit of distribution. I don't think it will start directly, and this is not good. So let's assume it happens because of Jackson Hole. So that would be, I don't know, somewhere around here. So we continue going higher, bit of a correction, we go higher again, we get to 658-ish, maybe even 6600, and then big dumpy. I don't know. So something like this. We'll see how it plays out, but the expectation is that we will hit this almost with 100% certainty. Uh, this one I think is low probability, but if it happens, this is how it should happen. So very soon, and do an engulfing and go below the CPI rally level. That this is the way it would play out. If not, this area becomes support. We consolidate around here. We go slightly higher, pull back, consolidate for a while around this level before eventually pushing to this 657, 8, 600 level for SPX. This is the equivalent of this level here, but at a higher level, $10 higher. 658-ish. So something like this. And this will happen either from Jackson Hole or at month turn. So somewhere around here. Uh, if we don't get a dump from Jackson Hole, I would expect we do a horizontal range here. So this will be a distribution range before eventually breaking down and going down quite a bit. I don't know, the minimum would be like 6-7%. So let's start from here. Probably like the quarter open should be retested with very high certainty. So the minimum pullback after we get this distribution consolidation period would be to go here. And we should still go higher later in the year to 670. This can get significantly lower, like max would be here. Either 600 or the yearly open would be the max drawdown. And that would be, this would be 9%. and this would be 11%, 10.5-ish, which seems pretty reasonable. But this would be the baseline, depending on what happens with the economic data, with the Fed cuts and everything. But that's kind of the setup. Okay, hope it helps. Have a good one. Bye bye.